It's Afsaneh Beschloss. I'm the CEO of the Rock Creek Group. It's a global investment advisory group investing in multi-asset class investments in emerging markets and in alternatives, as well as in impact investing. We have our a number of members of our advisory group here today to talk about global markets and also to discuss the potential impact of Brexit on global markets. We're very fortunate to have Dr. Greenspan. We have Dame DeAnne Julius, and we have Liaquat Ahamed. Liaquat, the FOMC is going to meet and we're going to have the UK referendum, right, I think a week after that. So what do you think that the impact could be of potential Brexit on the decision making on interest rates in the US?
So what's discounted in the market is about a 30%, 35% chance of a rate hike in June and a 65% chance of a rate hike in July or by July. And I think that reflects the following calculation. The Fed is fairly sure to tighten in the next few months. It's just unfortunate that a week before the Brexit referendum that they have an FOMC meeting, and I think they will come to the conclusion that postponing the decision by a month, the costs of that aren't that great, and the benefits are enormous, just in case we get enormous market turmoil if the British vote to leave the EU. So I don't think there'll be a rate hike in June. I do think there'll be a rate hike in July.
I obviously am not going to comment on what the Fed is doing, but I don't think it's that important because I think we are disregarding what the markets as a whole. I, like everyone else, am watching the short end of the market, but that's not where the real action is. The real action is in long-term debt instruments. And what I think, when I raised the issue of inflationary pressures in the very early stages, it's the removal of deflationary pressures. But it doesn't matter because we're now looking at the possibilities that these extraordinarily low long-term interest rates are going to begin to move. And there's no awareness of the possibilities of what will happen if that's the case. The major issue here is in equity markets around the world, we're dealing with equity premiums. That is the extent to which markets require a rate of return on equity per se. Those equity premiums are really quite high. They're not all that down from their peaks, but price-earnings ratios on stocks is being held up by the very extraordinary fall in long-term real rates. And that's going to change. And I think that asset prices are a very crucial issue around the world. And my view is that eventually we're going to see long-term rates begin to move, and that's going to bring the capex ratio on real estate, it's going to bring stock prices down. But when, I do not know.
Can we take a quick sort of straw poll around the table and see what you all think?
So if the Scottish referendum is a template,
right,
even though the polls show 50-50, I think when people look over the edge of the abyss, they step back, which is, I think, why you have this 80% probability. So I think that's a pretty good number.
The vote will probably go for Remain, but I would say there's about a 40% chance that that it would go for Leave. One of the key factors in this referendum is turnout. Because young people are much more in favor of staying, older people are more in favor of leaving. Older people tend to vote more than younger people, at least in Britain. So I think that is a huge uncertainty that could swing it towards leaving.
Interesting. Alan?
Well, I'm a little concerned about the don't know or don't care or don't have an opinion vote. I'm particularly concerned, especially with respect to the Scottish that we saw. That required some really heavy lifting. If it weren't for Gordon Brown, who did a magnificent job in holding Scotland in place, if the vote were held today, I'm not quite sure what you're going to get.
DeAnne, you live there, but also you think about this all the time.
Yes, I do actually. I mean, and it's a constant topic of conversation. Right. You know, from the taxi driver in London to a dinner party at the House of Lords. I think that this discussion actually illustrates the issues that, from an economic point of view, this is leaving the EU is not a positive thing for Britain, regardless of what the numbers look like. And maybe that's more of a short run, long run issue. But anyway, economically speaking, I don't think many people would vote to leave. But it is a much deeper issue than that. And I think it's a deeper issue for everybody. Even those who probably will vote to remain, there's no love lost in Britain for the bureaucracy in Brussels.
Let's assume, for argument's sake, that Brexit does happen. What would be the impact? Maybe, DeAnne, what could be the impact on capital markets there? What could be impact on trade? What could be the impact on the economy?
I think the impact in the short term would definitely be negative. I cannot see in the short term that Brexit, that a vote to leave the EU, would have positive repercussions. I think it would increase the span of uncertainty to at least 2 years. That's how long Britain would have to renegotiate its arrangements with the EU. But also we'd have to negotiate something or other with the rest of the world. The WTO has indicated we'd have to reapply for membership conditions. I'm sure Britain could do it, but so the uncertainty factor would be major. And that would focus partly on trade, but it would, I would imagine it would hit the currency, that there would be it's a shock. It would be a shock to the currency and not an upward one. It would also have repercussions throughout Europe, because many of the other European countries would have difficulties if Britain were no longer firmly part of the internal market. And it probably would have repercussions on flows into gilts. And we do run a significant balance of payments deficit. So then we get into the longer term consequences, and frankly, I think it's just unknowable, because there will be political repercussions if we vote to leave. I don't think Cameron can probably survive as Prime Minister. The Scottish side may decide to have another referendum, so that could actually go, I think, either way.
The one thing I find sort of a little bit off-putting is when, as I mentioned before, you're getting the British Treasury coming out with forecasts which are down to the last decimal point, and I'm saying, oh my God, we can barely forecast what's going to happen in 5 days, and you're going to come up with this abstract conceptual framework on the effect of Brexit. It's not, the type of forecasting they're doing is not feasible. Their conceptual framework of how the economy works failed to forecast the economic outlook of the last 15 years. Why do we assume that, having failed there, a much more formidable task is well within their grasp? And so I agree that there's very little we can forecast.
In the beginning of the year, that we were in a very different place. It was all doom and gloom. In about 6 months, be in a very different place than where we are today. And I think that's what makes our job more interesting here at Rock Creek.